$32 billion for a cloud security firm. I don't care how good Wiz is, Google completely overpaid.
Overpaid? Nate, they just bought the absolute best moat in the industry. You want them to bargain hunt for cybersecurity.
Yes, or at least not pay a valuation that makes bankers blush.
You never blush.
Fair point. But speaking of AI premiums, wait until you hear what Netflix just quietly bought to put in the director's chair.
Oh, Hollywood is going to absolutely hate this. The rundown.
I am telling you, private equity loves nothing more than something completely unsexy. Apollo is buying Nippon Sheet Glass for $3.7 billion.
It is literally just glass.
Exactly. Glass goes in buildings, cars need windshields, cash flows into Apollo's pockets. It is a beautiful, boring machine.
I read the footnotes. They are paying a hefty premium for boring. I want to see how they actually squeeze margins out of sheet glass right now.
You just hate deals you cannot explain with a software analogy.
I just prefer deals where the math makes immediate sense. But speaking of massive swings, GIP and EQT are teaming up to swallow AES Corp. $33.4 billion.
Staggering number. You put two massive infrastructure funds together to buy a utility giant, you are practically begging for a fight.
Which is exactly why I have my alert set for tomorrow morning. If antitrust watchdogs do not immediately start barking about a $33 billion energy mega deal, I will eat my microphone.
They always bark. Meanwhile, over in asset management, Victory Capital is refusing to take a hint.
Oh, the Janus Henderson drama.
They just sweetened their bid to $56.84 a share. It is a wildly aggressive play to force consolidation. I love the hustle. Asset management is too crowded anyway.
No, Nate, it is desperate. Victory is overpaying because they missed the boat on organic growth. Look at the outflow numbers from last quarter. They are trying to buy their way out of a sinking ship. You cannot fix bad distribution by bolting on another brand.
Desperate or not, $56 a share gets people to the table. Money talks.
We will see. Give me something fun before we get to the main event.
Hollywood gossip. Netflix quietly scooped up Interpositive.
The AI filmmaking startup? Wait, really?
The very same. They are bringing artificial intelligence straight into the director's chair. Imagine an algorithm telling an actor to be 20% more dramatic.
I am pretty sure you cannot code a neural net to fix a bad script.
Give it time.
But if you want to talk about tech companies paying an absolute premium to future-proof themselves in the AI era, we need to talk about the $32 billion elephant that just officially walked into the room.
Google and Wiz, the ink is dry? The big one. $32 billion for a company that is, barely 4 years old?
4 years old, Nate. And Google just officially closed the deal. The Wiz acquisition is done.
I remember when $1 billion used to mean something in cybersecurity. Now it barely buys you a decent seed round.
Well, when you look at the actual revenue multiples on this thing, I start to feel slightly nauseous. They are paying an absolutely massive premium here. The analysts are all parroting this line about how it underscores the premium on cloud security in the AI era.
Which is completely true.
Is it? Or is it just Google panicking because Microsoft and Amazon are eating their lunch on enterprise cloud contracts?
Okay, wow. Panicking is a strong word. I call it plugging a massive gaping hole in the hull of their ship. If you are Google Cloud right now, you cannot afford a single high-profile breach. Enterprise customers are terrified of deploying AI models if the security layer is even slightly porous. $32 billion is an insurance policy.
An insurance policy that costs more than the GDP of Iceland. I read the closing press release this morning, and the amount of buzzword bingo they played was staggering. It is all AI native this, and next generation that. But if you strip away the AI fairy dust, Wiz is a cloud security posture management tool. A very, very good one. But $32 billion good?
Yes, absolutely yes.
Oh, come on. You are sounding like a sell-side MD trying to justify a ridiculous fairness opinion.
I feel seen and attacked simultaneously. But seriously, Maya, look at the big picture. Alphabet has over $100 billion in cash sitting around collecting interest. What else are they going to buy? They cannot buy a consumer tech company right now. The regulators would block it before the ink dries. Enterprise security is the only sandbox where they can still throw their weight around.
That is exactly my problem with it. They bought Wiz because they could, not because the valuation makes any fundamental sense. It is a pure flex. And honestly, it sets a terrible precedent for the rest of the cyber market. Every startup with an AI pitch deck is going to double their asking price tomorrow.
Good for them. The bankers need the fees, Maya. Think of the poor bankers.
You are incorrigible. I am just saying I want to see the actual integration costs in their next quarterly filing. Because buying the tech is easy. Smashing a hyper-growth startup into the Google bureaucracy is where the value actually gets destroyed.
Fair point. But when we look back in 5 years, Google will be thrilled they paid 32 instead of 50. Wiz was a rocket ship. They had to catch it.
We will see. But speaking of massive price tags and potential regulatory headaches, we need to talk about what is happening in the energy sector tomorrow.
Oh, right, because 32 billion is cute, but 33.4 billion is where the real adults play. Voices. I saw an analyst this morning calling Victory Capital's sweetened offer for Janus Henderson a highly aggressive play to force consolidation.
Highly aggressive is one way to say refusing to take a hint.
Hey, $56.84 a share is a very persuasive hint. Victory is looking at a crowded asset management space and deciding they want to be the whale. I respect the hustle.
You just respect the banker fees. Come on, Nate. Janus doesn't need this. Look at the outflows across the sector. Smashing two asset managers together doesn't magically fix the underlying fee compression. It just gives you a bigger sinking ship.
I completely disagree. Scale is the only way out of fee compression. If you can't charge more, you have to manage more with less overhead. Victory knows exactly what they are doing here.
We will see if Janus management agrees. I bet they hold out for 60.
Speaking of holding out, the analysts are going wild over the Google and Wiz close, $32 billion. The consensus quote floating around today is that this underscores the absolute premium tech giants are placing on cloud security in the AI era.
Oh, the AI era. Drink. Every time a press release drops the letters A and I to justify a multiple, a banker gets his wings.
You don't think 32 billion is justified? They needed this.
Wiz is an incredible company, but let's be real. Understood, Google didn't pay $32 billion because of AI. They paid it because they are bleeding in the cloud wars against AWS and Azure and desperately needed a security anchor. AI is just the PR gloss.
Fair. Though speaking of AI gloss, did you see the gossip about Netflix quietly scooping up Interpositive?
The AI filmmaking startup? Yes. Human directors are going to absolutely love that.
Pure Hollywood drama. But we should probably pivot to some actual regulatory drama brewing tomorrow.
Oh, absolutely. Because $33.4 billion for a power company is definitely going to make some noise in Washington. Spill the tea.
Victory Capital is officially the guy at the bar who cannot read the room.
Oh my God. Yes. $56.84 a share. They just will not let Janus Henderson go.
It's an incredibly aggressive play. Market watchers are calling it a forced consolidation move, but to me, it just looks desperate. You don't sweeten a bid by that much unless you're terrified of your own organic growth metrics.
See, I actually disagree with you there. I think it's ruthless, but it's smart. Look at the crowded asset management space right now. If you're Victory, you either eat or you get eaten. They're paying a premium, sure, but Janus has the distribution channels Victory desperately needs. The math actually checks out.
If you like paying $56 a share for a legacy brand, I'm just saying, my old MD would have thrown this pitch deck out the window.
Your old MD probably missed a lot of good synergies.
Ouch. Fair, but ouch.
Speaking of quiet maneuvers, did you catch the Netflix whisper?
The Interpositive rumor? Yes, Hollywood is absolutely losing its mind right now.
A quiet little acquisition of an AI filmmaking startup. No big press release. Just Netflix casually bringing artificial intelligence directly into the director's chair. I found exactly 0 regulatory filings on this yet, which means they're trying to bury it before the guilds notice.
Oh, the guilds noticed. Imagine getting notes on your script from an algorithm. Make the protagonist 20% more relatable to viewers in the Midwest. It's dystopian, Maya.
It's efficient. Why pay for a focus group when your AI director already knows exactly what keeps people from canceling their subscriptions?
You're so cynical today. I love it. But if we want to talk about massive, undeniable numbers, we need to look at what Google just dropped on cloud security.
$32 billion for Wiz. We really need to look at those multiples. Tomorrow's radar.
I am glued to the regulatory wires tomorrow. If antitrust watchdogs don't bark at this $33.4 billion GIP and EQT buyout of AES Corp, I will eat my favorite Patagonia vest.
Oh, please. They're infrastructure funds buying a utility. Massive, sure, but not exactly a tech monopoly. Your fleece is perfectly safe.
We'll see. But what actually shocked me today is Victory Capital refusing to take a hint. They just sweetened their bid for Janus Henderson to $56.84 a share.
It's a hostile asset management roll-up. I love it. The space is way too crowded anyway.
It reeks of desperation, Maya. It's an aggressive overpay.
It's a strategy to force consolidation. There is a difference. But speaking of aggressive, did you catch the Netflix leak?
The AI director thing?
Yes. They quietly scooped up Into Positive, an AI filmmaking startup.
Hollywood is going to absolutely lose its mind over that.
The guilds are probably drafting angry tweets right now. We need to unpack that entire mess right after the break.